Are you thinking about buying a home, but you're thinking maybe I should wait until those interest rates come down before I buy? Everybody knows that lower rates mean better purchase, right? It's not quite that simple. It's actually a lot more complicated, and you're about to hear why. Welcome to House Talk on KAFM 88.1 Community Affairs. Each month I bring in local experts to discuss real estate topics that matter to home buyers and sellers in Mesa County. I'm your host. I'm Kate Porras. I'm a realtor at RE/MAX 4000. Okay, in our studio today, Jim Kaiser, Senior Loan Officer with Guild Mortgage. Jim, thanks so much for joining us today. So as a loan officer, how often do you get questions about interest rates on maybe a daily basis?
Like never. Yeah. All the time.
It seems to be that that's such a primary focus for people, and it has been now for a little while.
Right.
But there's more to it than just that.
Yeah, it's a challenging question because when someone says, well, where are rates today? My first question would be, well, where's your FICO scores? What's your credit look like? What kind of loan product are we considering? So all of those things can factor into a different rate. And
rates change, and sometimes multiple times in a single day.
In a single day, yes.
And so it's a tough question to answer. Well, based on what you've been hearing, from all the experts, I know about this time last year, everybody was talking about, we're going to have all these rate reductions this year, and then they didn't happen.
Yep.
And so what are we hearing this year? Is there a train of thought of what we think is going to happen this year? And I emphasize think.
Yeah, I think the consensus is right now that where we're at today is probably where we're going to be through the rest of the year. And we may not see any change in rates until sometime in 2026.
So this is it. This is our new norm.
Yes.
Okay. Based on historical comparisons, though, I mean, we're kind of seeing what right now, upper sixes, low sevens.
Yes.
Kind of what we've been seeing for a while.
Yeah. The interesting part is if you go back and look at the average mortgage rate for the last 54 years, it was 7.73.
Which is higher than what we've been for a while now.
And in 1971, 54 years ago, the rate was actually 7.33. And if you said, you know what, we're going to wait until rates come down back in that time period, you would have to wait 22 years before rates finally started to come down.
Okay, so it's 2025.
Yep.
So we're looking at 2050 something.
Yes.
If it's the same.
Yes.
And if it's the same.
Right.
I think that that's a hard thing for people to grasp. And I think coming off of what we saw with the historically low rates, just people have a hard time understanding that this is actually really normal right now.
Yeah, do you remember the movie Men in Black?
Yes.
Where they had that machine, they'd shoot your forehead and then you would lose all your memory. I wish we had that.
Do you have that?
I wish we had that because the days of 2, 3s, and 4s was somewhat an anomaly. I'm not sure we'll ever have those kind of rates again.
It's something that's also of interest that I've noticed recently is with the younger generation of buyers that I'm dealing with, people that they're first-time home buyers, but they're also younger generation, probably even, I guess we're starting to see that with Gen Z coming into the market pretty soon. This is normal for them. They have no understanding because they weren't involved in the home buying process when we were seeing those historical low rates. And so when they're coming in and we're saying this is a rate, that younger population is not as shocked by it. It feels more normal to them.
And I think more and more people are starting to get used to the rates where we're at today. I think we're stopping to wait for rates to be back in the 3s and 4s. Maybe someday we'll be back in the 5s, maybe high 5s.
High 5s?
Maybe.
No, definitely not in the 3s and the 4s.
I don't see it this year. I do not.
Do you still have people thinking that we're going to get that way?
Oh, yes. I have people that are always saying, we're going to wait until rates come down before we buy. And then I've given you some information we can talk about that it doesn't make sense to wait.
Yeah. Well, you're listening to House Talk on KAFM Grand Junction. In the studio today, Jim Kaiser, Senior Loan Officer with Guild Mortgage. And I love this scenario that you put together. It's if you're looking at it on paper, there's a whole bunch of numbers on the paper here. But when you break it down, kind of give us the breakdown of what all of this actually means.
Yeah, I used an example of a purchase price of $350,000, and I won't go into all the details, but at an interest rate of 7% today, your principal interest payment would be $22.12 if you put 5% down. If you said, you know what, I'm going to wait until next year, and let's say rates do drop to 6.5%. Well, as you know, when rates go down, what happens to home prices?
They typically go up because you have a bunch more people wanting to go out and buy a house.
Exactly. So if we did get to 6.5%, and I used a very conservative 2% appreciation, even if you would save about $68 on your monthly payment, you will have lost out on about $10,000 in net equity that you would have gained over those last 12 months. And if you take that $10,000 divided by that $68 savings, it'll take you almost 12 years to recoup that money.
Wow.
So it makes better sense to buy now, and you can always refinance later.
I also wanted to point out, so you put that as a 2% appreciation. I was pulling up numbers as far as where we were at the end of 2024. So if you're going based on average sales price for the end of 2024 in Mesa County, we actually had an increase of 6.9%. So definitely much more than that 2%. If you like to go with median sales price, still up 5%.
Right.
So we actually finished really strong last year when it came to home prices. And just based on the things that I'm hearing, again, it's, no one knows for sure, but what I'm hearing is they're expecting that, 3, maybe even 4% appreciation for the next year or two.
Right.
Which is a very standard, normal
kind
amount that we see. But that would affect these numbers even more.
Even more so. More attractive to then buy now. Yes.
So what do you think it's going to take to get people to take that leap? I know that, we have these conversations with buyers all the time on this is, here's the numbers, here are the breakdown. What do you think it's going to take to get people to actually take that leap?
I think what's helping already is just time, because when rates did get into the 6s and 7s 2 years ago, and everybody said, we're going to wait, and then a year went by, and then they waited again, and a year's gone by, and now I think people are realizing that, hey, rates are not going to come back down into the 5s. We just will do something now, buy a home, and we can always refinance later when the rates do drop.
I just realized that we've been talking about the rate change happened mid-2022.
Right. Yep.
We've already had 2 full years of that.
Mm-hmm.
Wow, that went by fast.
It did. Yeah. And so I don't see as many people waiting in 2025 as I did in 24 and 23. So it's starting to pick up. And I think people are getting used to knowing, hey, rates are going to be in the high 6s, low 7s.
You know what else is interesting is I was talking to somebody else today, and they were looking up numbers for the average age of a first-time home buyer. And they were in the average age was in the mid-30s. This is nationwide, but mid-30s for a first-time home buyer. And so if you're already in your mid-30s and then you're going to wait again to purchase, that's going to be quite an amount of time in your life to go by before you purchase a home.
Right. Yeah. Stop paying rent and paying for someone else's mortgage. Start building equity, which is the fastest way to build up net worth today, is through real estate.
I agree.
Yeah.
I'm a little biased, but I think you might be too. But in reality, there are a number of different ways to build wealth, but historically, owning real estate has been one of the most stable ways to do it. And that doesn't mean that there aren't going to be drops and bumps and hiccups along the way, but as a long-term investment, real estate is really a good opportunity for people to build some wealth. Yep. You're listening to House Talk on KAFM Grand Junction. In the studio today, Jim Kaiser, loan officer with Guild Mortgage. So let's kind of go back and sum it up. So we're looking at, okay, I'm going to wait, Jim. I'm just going to wait. What are you going to tell me?
I would probably put numbers like this together for them to show here's what you could do now versus waiting. And if you can wait until next year, here's how much you're going to lose in net worth. And it's, you probably have heard the term, you can marry the house and date the rate.
Yes.
Right. So you're going to be in that house for a long time. Why not at least get into the house now? Because you can get into it at a better price probably, because once rates drop, as we talked about, then home prices are going to start to go up.
And we're already seeing some more activity here in Mesa County as far as buyer activity. It kind of felt like it had a little bit of a slow start, but just looking at some of the numbers of showings that were even in just the last week, we're definitely seeing that bump that we typically get in this time of year as the weather starts to get warmer. I think it's starting to happen. So, the warmer weather, I think, draws more people out, people getting ready for school to be done and wanting to move in between, school year start and start times. I think it's showing that we're probably going to have a pretty active season already. And in fact, there are some instances, especially in some of the different price points, where we're actually having competing offers on some of these properties, especially if you're looking at the lower priced homes. Let me pull up my absorption rate. So if you're looking anywhere in the price range from $400,000 even up to $700,000, really that's more of a balanced market. It's not a buyer's market. It's not a seller's market. Pretty balanced. But if you're anything under $400,000, 2 or 3 months of inventory is all we have available. And there are a lot of buyers where that's the price range that they can afford. So if you have low inventory and you have active buyers, that makes it really challenging for those folks.
Right. And you asked me a question earlier, and I would say if someone is saying, I'm going to wait, the one recommendation I would make is then make sure your credit score is really good if you're going to wait, because FICO scores have the biggest impact on interest rates. So if your FICO score today is 620, then work with the lender to get a game plan of how to bump up your score. Maybe get it into the 700s. And that way you can get a better interest rate too.
And I know there's a lot of good things that you've talked about over the years in my conversation with you of ways that people can do that to bump up that score to help get them that better rate.
Yep.
Perfect. Well, what happens then if home prices appreciate faster than expected? That's going to have a big impact on what people can actually afford.
Right. I mean, you probably see this occasionally. People are out looking at homes. They're just looking, and then they find the perfect home, and they want to put an offer on it, but they haven't been pre-approved. They haven't gone through that process. So if you're even thinking about buying a home in 2025, sit down with a lender now. Even if it's 6 months out, 8 months out, they'll help you with a game plan to make sure you're ready to buy when that perfect home comes along.
I do get a lot of buyers that question, well, I'm just kind of thinking about it. I don't want to bug the lender, or I don't want to, jump the gun. And I tell them, no, just go have the conversation.
Yep.
There's no obligation. Just have the conversation so
Correct.
that you can get that game plan, like you said, going.
Yep. Because it never fails. That perfect house comes along, and now you got to scramble to get the application done, everything else done, get pre-approved before you can put an offer. Yeah.
We've talked about, obviously, home ownership purchasing, but what are your thoughts on renting?
I mean, every situation's unique. You might be moving here to Grand Junction for the first time, and you want to get a feel for the area and where you want to live. I understand if someone says, well, let me rent for 6 months just so we know where we want to live, and then we'll consider buying. That would be the only scenario for me I would think of.
If someone is going to be renting, though, I think you mentioned it earlier, there are things that they should be doing in that time,
right,
to prepare. What are some of your top things that someone could be doing if they're waiting, if they're going to rent now?
I work with quite a few potential buyers right now that are renting with a game plan that they want to buy in the fall. So I'm still sitting down and meeting with them, doing the application, maybe even pulling their credit to make sure that, okay, here's your game plan for the next 6 months. Maybe it's paying down credit cards, maybe adding credit cards, but most lenders in town know what to advise and what to do to improve your score.
And how about just saving extra money to have to put down?
True. Yep. Start putting, because you will need at some point probably some reserves. So just because you have enough money for your down payment, lenders are going to want to see you have at least a month or two of mortgage payments just setting in your account after you close on the loan.
Yeah, you don't want to completely drain everything.
Right.
And please don't go out and purchase something major.
Yeah. If you were thinking about buying a home and then buying a car, buy the house first, and then you can buy the car after.
Or even furniture. I've had some clients that are going to buy a beautiful new house, and they go out before we've closed and they buy a bunch of furniture on credit.
Right.
And that can be a bad thing.
Yeah. I wish there was a way I could take everyone's credit cards once they are under contract
and just confiscate them.
Give it back to them at closing. Yeah.
Temporary. Let me just hold on to those for you for a little bit.
Exactly.
It's true. It's so tempting that you want to. Yeah, but it really is important, and I don't think people realize that can kill your deal right before closing.
Yeah, especially if your ratios to qualify are really tight. Yep.
And I have been seeing a lot of tight ratios. A lot of folks like, this is what you qualify for. You don't qualify for any more than this amount, and especially if there are things like HOA fees coming into play and things like that can really make it tight for some of these folks.
Right.
You got to be very careful with every penny that you're spending. All right, Jim, a lot of good information. If folks have more questions for you, how can they get a hold of you?
They can reach me at 970-256-0080.
Perfect. Jim, thanks so much for joining us today. We appreciate your expertise. This segment airs on the second Wednesday of each month. You can also listen to podcasts on demand at KAFMCommunityRadio.org. And make sure to join us next month for another edition of House Talk. If you have a topic that you'd like for us to discuss, give me a call at 970-985-8555. You can also find out more information at kateporras.com.